Hello and good morning everyone. Welcome to the Money Control live stream. Well, when you think about blockbuster earnings, Santo, Coal India would probably be the last name that pops to your head, right? But
coal prices have been pretty strong, so
yeah, but still, I mean, we never talk about Coal India. We'll think about the HULs, we'll think about the Infosys of the world and RIs of the world. But Coal India has come out with a blockbuster set of earnings yesterday. If you look at it, has been one of the strongest performance or quarterly performances that the company has seen in recent years, and well, beat all across. I mean, from top line to the margins, we have seen beat all across, Santo. And for me, I think this earnings performance, I don't think is a one-off, right? Sometimes, companies can have a great quarter and then things peter out and normalize. But for me, I think this earnings performance is going to continue going ahead because a lot of the factors are still in play. You have the coal shortage going on. You have a very, very strong demand. The industrial sector or the manufacturing space is doing well. I mean, if you listen to what RBI Governor Shaktikanta Das had, he was almost very effusive about the fact that the manufacturing space or the industrial space is doing quite well. So clearly, demand is strong, but coal supplies are in shortage at this point of time, and that makes for a very, very good profit, setup for Coal India's earnings going ahead. And I would not be surprised that on the back of this June quarter earnings, Santo, there is more re-rating on the stock.
Well, it's been a good year for Coal India investors. Anybody who has been holding the shares since the start of this year has seen almost more than 50%, close to 60% bump up
gains,
in the stock price. That said, CJ, I would still be wary of the stock as a long-term bet. I can already see that many of these metal companies in their presentations have said that, easing coal prices is going to be one of the major drivers of EBITDA margins. So probably they expect some softening of prices there. But more than that, this can be a tactical bet at best. Would you buy it in your portfolio for the next 3 or 4 years? I would say very doubtful. Now, there are a couple of reasons here. The market has been very slow to kind of reward Coal India shares. If you look at it, the stock had peaked in October last year. It had come close to hitting 200 rupees, and since then it's not very far from that peak.
Yes.
So this despite the fact that coal prices had been steadily climbing. That's one part of it. Two, it's a sunset industry and there's no getting away from that. Right now things are looking very favorable for coal. Coal prices are on upswing. Now, can this upswing persist for long? I'm not very sure about that. Thirdly, let's not forget there's also PSU tag to Coal India.
Yeah, that is something for down.
Beyond a point, have you seen government allow PSU companies to make abnormal profits? Answer is no. And even if they do make, a lot of it will be paid out by way of dividends. And
which is a good thing, right? But
partly, then that makes it more of a dividend yield stock.
So, Coal India's story at this point of time is, I mean, in the past, people will talk about Coal India in the sense that, okay, if you want a good dividend yield, and probably you will not lose too much on capital as well, almost like in a way ITC, because Coal India didn't used to move anywhere, right? It was stuck in this range for years and years and didn't used to move anywhere because the earnings performance was also not there to merit any sort of re-rating. But you got the dividend yield. Now, the past 1.5 to 2 years, you have not only got the dividends, but you also got a lot of capital appreciation as well. And you talk about stock, the price, Santo. I mean, yes, 200 was a big hurdle, but recently the stock ended up crossing that. Now it is sitting pretty at around 220. And I am waiting for that IPO price of about 245. I think for me, that would be a, marker. If the stock can go past that price, then that will be setting a new dynamic altogether because you will be almost be in uncharted territory. Although the record high for the Coal India is about 300, 310 that they hit into 2018. But that IPO price has always been the big resistance for the company, which also, by the way, was almost 10 years or 12 years ago. So I think going ahead, if you look at what CLSA has also have to say, they have retained their buy call on the stock and actually upgraded their price target to 250 rupees from 205. This is almost a 22% bump up in the price target over the next 12 months. So clearly, CLSA is very bullish, and I think there is a good reason for that as well. And the major reason stems from the e-auction premiums. 200% e-auction premium is what the company enjoyed in the June quarter, which is a record high for Coal India. And I think going ahead, that will keep on driving profitability for the stock. And you talk about long-term, Santo, mutual funds were big buyers, and Coal India was among the top 10 stocks of mutual funds both in May and June, and we have to wait and see how the July data shapes up. And I will not be surprised if it features somewhere in the top 10 or top 15 stocks. So clearly, there are people out there who believe that Coal India, at least in the next 2 to 3 years, because of the fuel shortage that we are experiencing globally, not only in India, could be a long-term portfolio bet.
Well, closing remark, long-term investors in Coal India have not really made money. The stock was quoting around 440 rupees in 2015. That's the peak price, you know. Since then, it's been a very downhill journey there. And as I kept saying, this makes for a good tactical bet. It could give some good returns over the next couple of quarters, but don't hang in there for too
Well,
late.
Santo, my last bit on that would be that HUL once upon a time was also a long-term underperformer. RIL once upon a time was also a long-term underperformer. And Coal India has a very shorter capital market history compared to both of them, right? So clearly, sometimes in a stock's journey, you have those phases of long-term underperformance. But who knows, this decade could be different for the company.
Who knows?
That said, let's quickly move on to the trade setup for today. And wow, what a setup we have got, Santo. More than 100, 150 point bump up in the SGX Nifty this morning. So clearly, we are going to have a very, very strong start to the session. And that all is thanks to how the Wall Street performed yesterday. Very, very strong response to the inflation data that came out. Well, inflation is still high. It's still near multi-decade highs. But clearly, there is a sign that probably we are seeing some bit of a peak forming in the US inflation data, because the data for July was much below what the market was expecting or economists were expecting out there. If you look at it on a month-on-month basis, the growth rate in prices was actually virtually zero. So clearly, there is cause for optimism, and I just feel that maybe with this data coming out, and dollar probably lurking somewhere at the trend line of the head and shoulder formation on the charts, I just feel the setup for EM stocks could be very, very strong over the next 4 to 5 months.
Well, CJ, this has been one of the strongest, whatever rally you call it, rebound, bear market rally, relief rally, whatever it is, it's been one of the strongest in recent times, no disputing that. And now it just makes me wonder whether probably a lot of it would have already been factored in, because at some point, US inflation had to cool off. It couldn't have kept going up.
You also have the base effect also.
Exactly. So it's not going up in eternity. It was never going to be that way. So to some extent, maybe that's already been factored in. The second point is that corporate earnings, broadly, if you look at it, for the first quarter, while there have been no major disappointment, clearly there seems to be some kind of signs that at least things may have peaked out for the time being, and already Jeffries has said that the trend clearly has been downward, and this is likely to continue because there's been more of earnings downgrades and EPS cuts rather than earnings upgrade. You'll see that in most stocks.
But the downgrades are also not that hefty though.
No, but just look at the price targets. If you look at the price target, is a big giveaway. They may say that
individual stocks maybe.
Exactly.
But at an aggregate level, we have only seen, I think, a 3 to 4% downgrade this quarter on the Nifty EPS, that is.
Well, see, my own observation, CG, has been that in many cases where there has been slight upgrade also, it is still below the peak that we have seen for these stocks, which probably indicates that the big upsides clearly at this point in time the probability of that seems lower, because we have seen the way the market has rebounded and surprised everyone. So I wouldn't hazard a guess on where prices are headed, but I would say that the probability at this point in time clearly looks lower.
Well, that said, let's quickly move on to some of the other stocks that are on our radar today, starting off with Santo.
Well, Hindalco, strong set of earnings and a good comeback by the stock after it had almost halved from its record high seen in April. But now the question is how much of it is already reflecting in the price, and I would think to a large extent the prices may be reflecting market's optimism. And according to both Jeffries and CLSA, the aluminium EBITDA per ton that has come off from its peak seen during the fourth quarter, and even though CLSA has a buy rating on the stock and upgraded the target, the revised price target is still below the peak that the stock had seen in April. So, and according to Jeffries, further contraction in India aluminium EBITDA per ton is likely to continue in the coming quarters as well. So while the Novelis part of the business is doing pretty well, remember, there are other components also to the overall picture, and one would balance the other. Last point here is that in China, according to the company's own presentation, the production has gone up, but at the same time consumption is coming up. And China is a major producer, so if China is producing a lot and unable to consume a lot of it locally, it means that it's going to end up in the export market. And besides that, the company has also mentioned a slowdown in the three major economies, that is US, EU and China, as a big worry. So it's the stock has come, it fell sharply, rebounded, but now can this sustain? I'm a little skeptical of that, CJ.
I think Santo, it can, because of the fact that June quarter was expected to be probably the worst that the company has seen over the past 1.5 years, right? And even that worst quarter was actually better than a lot of the what market was expecting. So I think this earnings surprise itself would probably trigger a re-rating in the short term for the company. And I think for Hindalco, yes, the India business is of course an important part, but increasingly Novelis is starting to dominate the earnings picture for Hindalco. It's almost like the Tata Motors JLR story, right? And Novelis is very, very strong. It is on a very, very strong footing, not only because of the fact that of course they have a great management and they have been doing this for the past almost one and a half, 2 years, but also the industry that they cater to and the newer industries that they're catering to, the demand outlook there remains quite strong. Where you talk about the aerospace space, you talk about electric vehicle space, there are a lot of new areas that they're catering to where the demand is very strong, and that is reflected in the fact that they upgraded the guidance for EBITDA per ton for FY23. So I think Novelis itself could drive re-rating, and if the India business comes back on a strong footing, that will only add to the buoyancy there. And if you look at what CLSA had to say for the stock, they were very surprised by the profitability that the India business had to give. The EBITDA per ton for the India business was actually much higher than what the street was working with. So clearly, there is something working there in favor of Hindalco. And on the cost side, which had also impinged on profitability in June quarter, CLSA expecting the cost will probably peak in the September quarter, in the second quarter. And from there on, if we get some bit of tailwind from the cost side, and if the current price levels do sustain, then I think that clearly adds to the margin. So for me, I don't think this revival in the stock is short-lived. I think there is some legs to it. And of course, we will have to wait and see how the China situation develops, whether it will be favorable as a lot of people like me expect, or whether it will be adverse as the management and you pointed out. So we have to wait and see, but for me, I think this rebound could continue. Well, the second stock on my radar today is again from the metal space. I think it seems like a metal show today. Well, is SAIL, Steel Authority of India. Bad quarter if you look at it from a year-on-year perspective. If you look at all the numbers, they are down almost double-digit, 20-30%. But they were all above the street's estimate. And I think that is a testament to the way the management of SAIL has been functioning. The new management that came in a few years ago, clearly they know where their priorities lie at this point of time. They have taken care of the debt of the company. The efficiency levels have increased, and clearly that is showing in the fact that in one of the worst quarters that the steel sector has seen in recent past, the company was able to beat street estimate. There was a big beat on margins as well as revenues, and I think going ahead, Santo, given the fact that the stock has already fallen 40-50% from its record highs, it is possible that it could attract some bottom fishers out there.
Few quick points here, CJ. Now, when you say beating street estimate, it just means that the numbers were not as bad as market
exactly.
was expecting.
Which is what you look for in a situation like this.
One thing. Secondly, you look at all steel stocks; they fell sharply, but look at the rebound. In SAIL's case, that's been the lowest. Okay. That's the other thing. Margins, the margin contraction in the case of SAIL has been much sharper when you look at somebody like Tata Steel. Now, overall, the outlook on the steel sector is cautious at this point in time. And when the outlook is cautious, where would you typically want to put your bets on? It would be with the largest player in the sector.
Okay.
Well, the market has just opened. We'll take a quick look at the market and then resume our argument here. A strong opening for the Nifty, 173 points up in early trade, and strong advance to decline ratio, 1600 stocks up and less than 300 stocks down at this point in time. Strong performance by the mid-cap index as well, up close to about 1% in early trade.
Yeah, and surprisingly, the VIX has also started the day off on a strong footing, higher by almost 1.5%. But if you look at the stocks, clearly Eicher higher by about 3%, Tech Mahindra higher by about 2%, Tata Motors, Bajaj Finance and Wipro also higher by about 1.3 to 2%. So clearly a very, very strong start. Eicher Motors, I think the commentary from analysts has been quite strong after the earnings. So clearly I think the street has really liked what they heard from the management in the conference call. So another stock to look out for in the automobile space. Also because I think Eicher goes with the theme of, buy what the rich are buying. Basically, because we have all debated this about the K-shaped recovery and all. So clearly the market wants to probably lean towards companies who are catering to the the high-end customers, and clearly that is showing in the performance of Aisha. Santo, you talked about SAIL and you talked about probably prices and stock performance going ahead. For me, I just feel that, of course, the margin pressure was always going to be, because SAIL was probably one of the biggest exporters out there. So the export duty was always going to hinder SAIL more than any other company. But if that export duty is taken off, as we yesterday talked about the fact that JSW Steel's management indicated that prices have already fallen 27%. So there's really no need for that export duty to remain anymore. If that is taken away, I think you could see a very sharp rebound in sales margin, because that export business will again come alive. So for me, I think this is one stock to watch out for, because the rebound could be very, very strong.
Well, Interglobe Aviation, the government has allowed companies to fix their own airfares starting from the end of this month, and that's a big positive. It comes at a time when already there's been a lot of pressure on airline companies because of rising fuel prices. They've seen a good performance by IndiGo already. So far the stock has done pretty well, and the management has said that there has been a sharp pickup in fact in both in corporate travel as well as leisure travel, and now that we are starting to enter into the festive season, this is only likely to get better. So I would be very positive on Interglobe Aviation.
Santo,
at this point.
If ticket prices rise even further than what they have already in the past 6 months, I really doubt that I will be taking any planes back home during festivals. But yeah, I mean, for me at this point of time, that there is the short-term challenges and there are the long-term challenges. The short-term challenge, of course, is the fact that ticket prices have gone up too fast, too soon, and with the price cap now being removed, you can only expect them to go up even higher. And I think already a lot of analysts are worried out there that this could start impinging on demand, because this has been the cycle in the aviation sector, right? Prices fall down, demand comes back, then prices start rising because of higher fuel costs, and then demand starts to suffer. So I think for me, I think the demand scenario going ahead in the short term would be something to keep an eye out on. And on the long term side, of course, you have the threat of competition that is emerging in the aviation sector. Akasa Air is now flying, Jet Air soon would be flying out. Clearly, the level of competition, and with the entire revamp of Air India, which will happen in the long term, I think there is a lot to be concerned about on the margin front as far as the aviation sector is concerned. And also, let's not forget that the cost side of the challenges also remain, right? Yes, oil prices have come down sequentially, but on a year-on-year basis, they still remain quite elevated. So that is, I think there are still a lot of challenges that could probably cap the upside on Interglobe going ahead for me.
Well, CJ, ultimately prices, airlines price tickets as much as the market can bear. So I guess they will be reasonable.
Well, there used to be a point of time when a lot of people were not part of the aviation industry because they just could not bear the costs at that point of time. So
and also the second point about rising competition. See, if you look at Interglobe Aviation's latest quarterly numbers, it's managed to narrow its losses. Whereas if you look at
but there's still losses, Santo. Even
yes,
probably one
true.
of the best quarters they have seen, they've still ended
no.
up
The
making
point about competitive pressures is that the competition is also bleeding. If you look at it, both AirAsia and Vistara's losses, in fact, have widened during FY22. It's not as if the competition is sitting pretty, which means that the market leader obviously is best placed in a highly competitive scenario. That's why I would be positive on that.
Possible.
Well, last talk, JSW Energy, the company announced the takeover of Mitra's renewable assets, and that is expected to boost the overall generation capacity of JSW Energy by about 35%. Now, JSW Energy has set a target of about 10 gigawatts of overall power generation capacity by FY25, and already with about 2.5 gigawatts of solar and hydropower projects already under construction. The capacity is likely to go up to 9.1 in the next 18 to 24 months. So, it's very comfortably placed to meet that deadline, and most importantly 65% of that capacity will be in the renewable space. So, that's a big positive. Already the balance sheet is pretty strong, debt to equity ratio is less than half, net debt to EBITDA is less than 2, and also the company has about 1,825 crore worth of cash on its books. Besides, the Mitra's assets, they all have signed long-term power purchase agreement, and the average age of those are about close to 18 years. So, there is visibility on earnings as well. So, all these make JSW Energy a ripe candidate for re-rating?
Well, Santo, the renewable energy space right now is the new gold rush, right? It's like the 1870s in the Africa continent all over again. The people are just getting into this industry in the hope that because margins are huge, there would be huge demand, so everybody wants to get a foothold. But I think the renewable space, especially the solar space, has seen this happen before. The previous decade, the first 10 years of this century were all about getting into that space because everybody thought the demand would be so great. And then we know what happened in the 2010s. You had state governments cancelling out PPA contracts because suddenly solar energy prices fell through the roof. And I think that is something that remains a threat going ahead. With so many people, big players, conglomerates getting into the space, how much of the margins are you really going to enjoy? So yes, at this point of time, there is a lot of enthusiasm, but you have to be a little wary because people who have been in the industry, they know that they have seen bad days after the good days, and we'll have to see how that develops for this sector.
But
so yeah, versus Santo, we were talking about SAIL. One of our viewers actually, name is Markawala Zakaria. They wanted to know what you think about Tata Steel.
Well, in the steel space at this point in time, I'm going purely by price action. A lot of damage has been done. Now, whether the stock will manage to cross the previous highs of July is a little doubtful, but I think it still makes for good a tactical kind of approach to these stocks.
Yeah, I am quite positive, as you know, on Tata Steel because I feel that the company has clearly turned a page with the pandemic. They realized that they had to take care of that debt on their book, and they've been very smart about it. Much like a lot of the corporates out there, they've utilized the supernormal profits that they made during the pandemic to take care of their debt. I think that, of course, that deleveraging, if it continues, along with strategic capacity expansion, and of course the fact that they are the market leader in the Indian market, I think places Tata Steel quite well. Also, the European business also for Tata Steel is starting to turn around. So that itself could be a good kicker for earnings going ahead. And I would expect that a lot of people could be bottom fishing on this stock going ahead, given the fact that it has corrected so much from the record highs.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a great trading session.